Welcome to Growth TV and ACG Production. I'm Carolyn Vallejo. Today, we're back with Tuan Nguyen, an economist with RSM, who joins us again to share his economic outlook for 2025 and the trends that will impact the middle market this year. Tuan, let's get right into it. As we enter 2025, what macro trends are you expecting to see?
The U.S. economy is on the path to end the year on a very strong note, and we expect it will continue to perform well into 2025. Now, in the past 12 months, what we have seen from the economy matches our forecast we had at the beginning of the year when I first came on your program in every single category. GDP growth is strong above trend, checked. The labor market keeps adding thousands of jobs, checked. The Federal Reserve successfully delivers a soft landing, checked. And we ended this year with a total of 100 basis points of rate cuts, also checked. Based on those key economic conditions, there's a great chance that the economy will continue to grow at or above 2.5%, while unemployment rate and inflation remain at a healthy level. We assign about 55% probability that such a scenario will be the base case in 2025. Alternatively, for about 30% or so, we think that the economy could outperform those forecasts given the potential of a great number of supporting fiscal policies from the new administration, like tax cuts, less regulation, and a much friendlier environment for deals and M&A activities in the next year and beyond. And last but not least, there's a 15% chance that an exogenous shock or policy error could tip the economy into recession. A small probability, but not at all trivial.
Okay, you just touched on this, but there is a great deal of talk as to what we can expect from the Trump administration in the coming months. So what are some of the impacts you see coming down the pike?
There's no denying that the recent optimistic sentiment across businesses and the financial market has come from the fact that more likely than not, we should see more fiscal support from the new government. Most of those policies will center around low taxes, less regulation, and more restricted approach to global trade. In the short term, we expect those policies to keep growth at a strong level, while effectively keeping unemployment rate low, also in conjunction with the addition of stricter immigration policies. However, further down the line, a significant boost to demand and higher tariffs are the perfect recipe for inflation to rebound. Whether inflation will be too uncomfortable for the Fed in 25 or not, we'll have to wait and see. But right now, the Fed is beginning to think about slowing down the pace of rate cuts. And consequently, there'll be another layer of uncertainties around the clash between supporting fiscal policies and at the same time loosening monetary policies when it comes to the inflation concern.
Something certainly to keep an eye on. But to put this all into context for the deal-making community here, how do you think these trends will impact middle market businesses this year?
For middle market, we believe 2025 will be a year with a lot of new opportunities, lower tax cuts, less regulation, and less competition from overseas should translate into higher demand for domestic companies and as a result, higher profit margin. The M&A landscape should also get harder as overall interest rate is expected to continue to fall. And as we are likely going to have a more M&A friendly Federal Trade Commission in the next 4 years. But that does not mean there are no significant obstacles that mid-market businesses will have to navigate through in 2025. First of all, for companies that are exposed to the risk of higher tariffs, tariff mitigation will be the number one keyword that will follow each and every business decision in 25 and beyond. We won't know the real scale and scope of new goods tariffs until the policies are put in place. But that is exactly why it is even more important for mid-market businesses to position themselves well in advance before those tariffs are in effect. Second of all, finding talents will continue to be a challenge as the supply of new labor will be massively impacted once the immigration channel is limited. To deal with sticky inflation and labor shortages at the same time, we cannot emphasize enough the importance of productivity-enhancing investment, whether it is on AI or automation. And with that, the focus on efficiency and productivity will absolutely define whether middle market companies will come out ahead by the end of 2025 or not.
All right, well, we'll just have to wait and see, Tuan. It was great to have you back on Growth TV. Thank you so much for sharing your insights.
Thank you for having me.